The Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
The show, everybody.
You know what they don't say in that? Here's Frank Napolitano from Mortgage Brokers Ottawa. Here's Paul Rushforth from Paul Rushforth Real Estate. What about, here's also Greg Tilley, your host from Paul Rushforth Real Estate.
Let's get it changed.
Yeah, I think we should.
I don't need the glory. This is about you guys. I'm just here to keep the train on the tracks.
There we
I
go.
don't know, Greg. I mean, I get some of my clients that say, "Hey, like, what's Greg like?" And, so,
You say he's a jerk. He's
autographs.
He's that, yeah.
You want an autograph? I'll get one for you.
Well, he now goes to houses. He's, I'm Greg Tilley. I'm here to shoot your house. Oh, you're the
Yo,
radio
Greg.
star.
I hear you on the radio.
I hear
Yes,
you on the radio.
I'm
yeah.
getting that a little bit for
Yeah,
sure.
yeah,
So, all right. So we got a lot of news that came out this week. We have the job number. We do have the job numbers, but we'll get to that in a few minutes. But we have the numbers from April from the real estate board. So what happened in April, Paul?
And there's relation between the two, by the way.
Absolutely.
Oh, definitely.
Absolutely. Listen, we saw January, February, March very, very flat. The numbers were not great. You know, at one point, our average sale price was down almost 5.5%. And we're starting to see a comeback. I mean, our company had an amazing April. We did 82 sales in April between firm and conditional, which is a crazy month. And the real estate board numbers weren't as good, but there were some good numbers in there, though. So, for example, in April, the number of sales was down 1.9%, but the average sale price was up almost 1%, which is great.
Interesting.
In April, it was over $712,000. So at one point, we were down as low as $670 as an average sale price this year. Year to date now, our number of sales are a little bit down. They're down 4.4%, and our average sale price is down 0.4%. At one point, we were down 5.5%. So, our average sale price now in Ottawa was $683,000. Keep in mind, last year we ended at $700,000. So we're down just a little bit with the average sale price, but it's creeping up, which is really, really good news. We're starting to make a rebound. It's started to feel busy. When we look at different segments.
It definitely started to feel busy.
Yeah, on the listing side, for sure, you were busy. But, when we look at the, single-family homes, the number of sales are down 4.3%, and the average sale price is down 0.6%. Townhomes is the only segment of the market where the number of sales are actually up. And they're up 2.4%, but the actual price is down 3.3%.
Oh, interesting.
And then the condo market, of course, we've talked about the condo market. It's tough.
It's sad.
It's tough. I mean, the number of sales are down 17%, and the average price is only down 3.9%. So looking at these numbers, we're starting to make a rebound. It's starting to feel busier. And one thing I can tell you, if you're a buyer in this market, you have more choice, you have more time, you have more selection. You have an opportunity to breathe, to look at different properties. If you're a seller in this market, I've said it before, if you think you can try a price, you're making a massive mistake in this market. You have to hit the price perfectly. You have to list with the strongest representation. You have to have the right strategy and marketing in order to get your home sold. I've never seen a market like this, like I've mentioned, where those three things are so important. Listing with the right person, getting the price right, and having the right strategy and the marketing approach to it. You have to, and making sure that house
critical.
Making sure that house looks absolutely beautiful. Now, saying that, I've had a couple of people after I say that say, okay, so now I have to go upgrade my kitchen, my bathrooms. No. You can price your home according to what you have, but things still have to look good. They have to look tidy.
Yes.
They have to look decluttered. They have to look clean.
Spotless.
Clean. Yes. They have to smell good, things like that. So April was, in my opinion, I know for my company, it was a huge rebound from what happened in Jan, Feb, and March. It feels like a late spring market that we're having right now because May is starting out quite strong as well for us, which I assume will be strong for the real estate board as well. So, I mean, on your front, Greg, you do all our pictures and videos and all that. Like, you were super busy in April?
Swamped.
Yeah.
Yeah.
Which is good news.
Oh, yeah, absolutely. And that's not like last week and the week coming up. Jammed.
Yeah,
I'm almost fully booked for this week for shots coming up.
Which is great news, which means we're listing a lot of properties. And now it's just like, working with our agents just to make sure that they're priced perfectly, making sure that, they're positioned perfectly to get the top dollar for the sellers.
So what do you say when a seller comes to you and says, well, I want to leave some room to negotiate in the price?
That market's gone. Like that's a different market. We're not in a, if you hit the right price, you should be able to get your price, if not really close to it. The room of let's negotiate. Like, I have one client that says, well, I'm willing to accept way down here, but I need all that room to negotiate. I'm like, But people are looking at homes in your price range right now, and yours is inferior to theirs. Well, why don't they just make an offer? Why would they make an offer on yours when there's another house that's superior to yours?
Why would they even come and see it?
Well, yeah. Well, so I always tell people when we list a property, I said two things are going to happen. When you overprice your home, you're either going to get a lot of showings in the first week, which is when you get your most showings, but most likely they're just seeing your house because there's others in the area that they want to see, and they want to see how yours shows compared to theirs. If you get no showings in a week, you have a price problem. Both scenarios, you have a price problem. So in this market, and I've talked to a lot of sellers over the last 2 weeks, you're zero appetite for overpricing a home. Yeah. Zero. You can never underprice a home, but you can always overprice a home. So make sure that you're priced spot on in this market like I've never seen before.
Okay. All right, Frank. So as promised, job numbers.
Well, we've lost over 100,000 jobs the first 4 months of this year, and the expectation was that the job losses would mostly come in the second half of this year. So it's a little scary to know that we've started already. Already we've started in the hole, and who knows what's going to happen on the forecast moving forward. So I think it makes sense with the house sales we're seeing, and not only here in Ottawa, but across the country. Everybody's experiencing the same thing. Now, the unemployment rate has gone up to 6.9. It's well into double digits with the youth. And that's a sad story because, a long time ago for Paul, too, he thinks he's so young, but it was like 40 years ago when he was in school, 35 years ago during high school.
He is the youngest person in this room right now.
He is, not by much. But
I'm the smartest, of course.
Oh, yeah, by far. But again, kids, right, they finish high school, they want to work for the summer, and there's no jobs out there.
But you say that, though, Frank, everything's understaffed, though. Like, you go to a restaurant nowadays, and the service is very average because they're understaffed. But
they can only charge so much. So here's the problem we have right now. People will only pay so much for meals.
Right.
And if you overprice them, well, then nobody's going to go. But if you keep them where you make modestly, then you have to understaff because it's the only way you're going to make money as a business owner. So that's I think, what business owners are facing today. Interest rates at 4% aren't that bad. But when everything costs so much, they're not so great anymore. So it
compounds into making it a little more painful for people.
How about the pumps nowadays? Like,
I don't know.
Gas isn't. Yeah, you don't know because you're electric. That's right. But
trust me, I know.
Gas. I mean, I filled up the other day at $1.89. Like it's almost $2 a liter now.
So I don't know if you guys saw the story yesterday. Where police got called to this gas station in Alberta somewhere, where fistfights broke out because this dealer decided to lower the gas to $1.64 and everywhere else was $1.79, and they were lined up. And apparently a couple of cars tried to cut in and created fistfights. So
I believe it. But there's
gas.
There's now security at grocery stores.
Like,
there's security at grocery stores because people are stealing food. They're stealing gas. They're stealing. It's a tough economy right now. It's a very, very tough economy, and I don't see there's a silver lining coming anytime soon.
I don't either. So I'm part of a group that we spent all day Tuesday at Parliament Hill meeting with MPPs. And, for the first couple of months, the key word was uncertainty. So it's not that it's not a key word. It's just fallen to number 2. The number 1 word that's used now is affordability.
Affordability, yeah.
Everybody, even at Parliament Hill, they're talking about affordability. And a couple of the MPs asked me, they said, okay, if you had to change one thing, I said, well, if I had to change one thing, I'd love for house prices to go back where they were pre-COVID, but that doesn't make any sense because then there's a whole bunch of people then that would have overpaid, and we can't do that. No. So I said, if there's one thing, I'd love interest rates to be at 2% across the board. That would be awesome, but that's probably not going to happen either. So what's the answer? I said, well, maybe we're paying too much tax.
Mm-hmm.
We are. Like, utilities should never be taxed, in my opinion. They're a necessity. Necessity shouldn't be taxed. So utilities, food, and gas shouldn't be taxed. And if you want to tax gas, number one, I'm ashamed that we tax gas because of all the oil we have in our country. Why are we among the highest paying countries for gas when we have it? It's not like we're getting it somewhere else.
We're not bringing it in. It
doesn't make any sense. And, but again, they nod, they say yes, these MPs, but at the end of the day, one MP said to us, well, okay, so if we do this, so we've asked for, so here's the things that we went into Parliament Hill to ask for. Number one, 30-year amortizations across the board.
Which makes sense.
Shouldn't be just first-time home buyers. Should be 30-year amortization across the board. Whether you're a second-time home buyer, it doesn't matter. With affordability, that's an easy fix. Number 2 would be the HST, GST clarity on new builds.
Clarity's right.
Let's get that clear. How much, how it's actually processed. Does it come off the purchase price? Because that's what Canadians want. So let's get that in place. The third one, and very important, specifically it's more important in some centers than others, like Toronto and Vancouver, but the amount of mortgage fraud for shelter that happened specifically during COVID and even just before COVID and after COVID is off the charts. But what that does is that drives up house prices, because if you're able to commit fraud for shelter, then you're in a position where now you've got less supply and more demand. Therefore, you're driving the values of houses up. So we saw a lot of that in GTA and GVA. So what we asked for is a digital tool where not the brokers, but the banks have access to this digital tool where they put in the customer's name, SIN number, date of birth, and what line 15,000 says on their tax return, on their notice of assessment. And it's just a simple yes or no within 5%. Because obviously people get raises. So if they do their tax return and their tax return line 15,000 is 100,000, and the customer says no, they give us an NOA that says 200,000. Clearly, it's fraudulent. And these documents are done so well that you can't tell they're fraud.
It seems to be a simple way to
it is.
Police that, basically.
Most MPs were on board. One wasn't. She goes, nah, it's security, like it's privacy. I said, what privacy? All you're getting the banks to do is do date of birth, a name, and SIN number, and just they're going to actually give you the figure, and all you got to do is say whether it's within 5%. I don't think any privacy is broken.
FinTrack takes way more information than that does.
100%.
And that's not privacy problems.
No,
right?
absolutely not. It's required by the government to do FinTracks on all these deals.
That's for money laundering, right? So again, that's one of the concerns.
Different cause, I guess.
So along with fraud for shelter, money laundering is another issue, and both our industries are very deeply ingrained in making sure that we do whatever we can to avoid money laundering.
100%.
Hey, folks, have a question? Head over to realestateandmortgageshow.com. You can submit it there or give us a call at 521-TALK, 521-8255. We'll be right back. So just before the break, we were obviously talking about all the numbers, the job numbers, the real estate numbers. Affordability is the new keyword. But there was something exciting that happened yesterday. The Ottawa Food Bank Food Sort Challenge.
Yes, that's funny you bring that up. Yeah, we were lucky enough to I guess not play, but to volunteer our services to the food bank, where there's probably about, 60 or 70 different companies that do this, and it's a goal. You have to raise at least $2,500, so you do the math on that. That's a lot of money raised, and most teams raised way more than that. And then we actually went in and sorted the food into boxes and did like a challenge for the Ottawa Food Bank. It's such a good cause, and it was such a fun event, and Paul Rushforth, the real estate, was lucky enough to come away as the victor, but we were very competitive because we actually wanted to win. But in the end, everyone was like, "Oh, congratulations on winning!" I was like, "I think everybody won here, to be honest with you, especially the Ottawa Food Bank." So it was a great event. We're happy to do it, and I'm sure there was a couple $100,000 raised for the Ottawa Food Bank, which is what a beautiful.
Yeah, it must have been all week, because I think the MIC went on, they went earlier this week. They went on Tuesday or Wednesday this week, Advanced Mortgage Investment Corp. So.
Oh, yeah, for the same challenge,
same
the food
thing,
sort challenge?
Yeah, they spent the day volunteering at the food bank on, I think it's Tuesday.
Okay, this wasn't at the food bank. This was a sorting challenge at the
was it at EY?
No, it was at the casino there, the Hard Rock Casino.
Hard Rock Casino, yeah.
Yeah, it was at the Hard Rock Casino. It was really, really cool, and we were all dressed up. We had headbands on and all that stuff.
And this is the second year you've taken a group of us from Paul Rushforth Real Estate.
Yeah,
too,
we did it last year, which was another great event. We did that one at, where was that one? I'm drawing a blank where that one was.
I think that one was at the EY Center, because I don't think the Hard Rock was open last year, right?
Oh, I'm drawing a blank where it was. But anyways, the Hard Rock, it was a really, really cool event, and it was fun to, and there were some major companies in there. You know, you had EQ Homes, and you had all these builders, and you had all these different accounting firms and lawyers firms, and Royal Bank was there. I saw one Royal Bank was there. I think TD might have been there as well. So it was just good to see all these companies get their hands dirty and give back, which was amazing.
Well, and especially with the conversations about the economy and all that the food bank is stretched these days.
We live in a good city. We live in a good city where we don't have the major corporations like Toronto and Vancouver might have, but the giving in a city like Ottawa is pretty good, actually.
But you know what? A lot of our big corporations, like you look at the big builders of the world and the mortgage brokers and the bankers and the real estate companies and all that, I think a lot of them do a lot of work, a lot of philanthropy, which is amazing. Like, we give back here in Ottawa, which is great.
And not exactly have to get credit for it all the time. There's a lot of times I know that both our companies have done work, and we're not on social media promoting it. We just want to give back. Sometimes you just give back and you don't have to get credit for it. It just feels good to give back. So
Paul just wanted to promote it because our team won.
That's the only reason. That's the only reason.
Paul doesn't have a competitive bone in his
Not
body.
at all.
I had my son Hunter there, Jason Craig from my team, Angie White, who's like she's a beast when it comes to this kind of stuff. She wants to win.
Pretty competitive group.
We had a competitive group. We were yelling at each other. Let's go! Where's the peanut butter? Where's the beans? it was awesome.
You were what? Just managing the whole thing? Because I don't see you sweating or anything.
Oh, dude, I worked my tail off to win that one.
I'm sure you did. Wait until your team calls in now and tells us the truth.
Yeah. Worked my tail off.
No, great for the Ottawa Food Bank again. You're right. I mean, there's big drives that happen around Christmas time, Thanksgiving, but they go through a little bit of a lull, and here's the lull. And if they can put a contest like that together, raise some money and help people out for sure, because there's more people going to the food bank. Every day people are going to the food bank. People that actually have jobs have to go to the food bank. More than ever
right now.
because they don't have enough money for food.
Yeah. Yeah. Well, there's a couple people. I just posted a couple pictures of the event, and I had a couple people actually responded and was like, thank you so much. I rely on this food for my family, so thank you so much. Petra just texted in. Last year was at Lansdowne. I totally forgot.
Sorry.
Yeah.
Sorry, Ottawa Food Bank. I'll do better next year, I promise.
Yes.
Totally. Hey, Monday I'm heading to Queen's Park on Monday, so it's two of them in less than a week. But we did the federal, obviously, on Tuesday. We're doing provincial on Monday. I've got a number of meetings, including 2 MPPs here in Ottawa that I'm meeting with. But our message on Monday is going to be, again, with the provincial government, because obviously they're responsible for the PST on the new builds. Let's get clarity on that, and let's get that passed. Let's make sure that it's nice and clear how builders structure the contracts for first-time home buyers or people that are buying new builds, so that from a financing standpoint, we understand what we're able to do. The rebate after the fact is not a good solution. The rebate needs to be at the time that they're doing the contract. And let's get some clarity for people that may have purchased a home February 15th.
Yeah.
And because
that
you
aren't
said it for
taking
April
possession.
1st, but the shovels aren't even going in the ground until July or August. So why shouldn't they be grandfathered into this program?
Because and what's happening right now, Frank, which is the problem, is this came out and we thought this was going to be incredible for new home builders. Everyone's going to be buying and this and that. People don't trust right now that this is actually going to come into effect. So they're holding off. There's a lot of people we know that were ready to pull the trigger, and they're like, you know what? We're just going to wait till this comes out. So this is actually now hurting new home builders. It really is.
I'd be
got
nervous.
Emails during 2025 from people saying, hey, we're closing in 2026. We bought this because obviously they came out with the announcement that they were going to do this GST rebate back in March, April, May of last year. So people were buying in the summer expecting this rebate. And they're probably not getting possession of their houses till July and August. And the way it stands now, it doesn't feel like they're part of this deal anymore, even though it got introduced last year and they bought after it was introduced, but it hadn't passed yet. So therefore, they expected to get it. So this is the clarity we need to see. So we need it on that front. The other thing we're really pushing hard for is, again, the one thing that came up at Parliament Hill was first-time home buyers. Like a lot of these MPs are in their 40s, 50s, and they've got kids that are in their 20s, 25, and they're saying, I don't know how my kids are going to be able to buy a house. Well, I said one of the solutions is going to be we're going up Queen's Park on Monday, and we're pushing for the land transfer tax rebate for first-time home buyers to be bumped from $4,000 to $8,000, because it was set at $4,000 back in 2016 when the average price of a home was less than half than what it is today.
Right. Yeah, so average prices have gone up massively.
Well, keep in mind, that $4,000 rebate right now is...
It's on the first 368.
But that's great for, Ottawa and...
Not even.
But not even. But like, you look at Vancouver and Toronto, like, your land transfer tax, $4,000 off, whoopee. Like,
it's nothing.
It's nothing.
It's nothing. So we need that to go up to 8 or at 10,000, but we didn't want to get greedy, so we said 8. But, and if they say something, because a lot of times politicians will say, where's that money coming from? And my answer is, well, wait a second. Like 5 years ago, when the average home price of a home was much less, you weren't getting all this revenue. Now you're getting double the revenue because the houses have doubled, more than double, because what happens with land transfer tax, the lower amount is on the lower value of the home. As that value goes up, the percentage goes up as well. So they actually make more as the house is more expensive.
As prices go up.
Give some of that back. Yeah. Because right now you've been profiting big time on the land transfer tax.
Yep.
Have a question? Head over to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back.